And we're live. Happy Wednesday, everyone, and welcome to the Mojo Show, your real estate podcast where we talk about everything real estate. I'm your host, Joe Mortgage.
And I'm Cup of Joe Mortgage.
This week's episode, we're starting up our new series on how interest rates affect different aspects of the housing market, especially since we've heard with the Fed cutting rates. How is that going to affect things? Especially today, we're going to focus on how interest rates impact purchasing a home. But before we get to that, a little coffee talk this morning with the Joes. I got to tell you, Joe, last night, something that I did for the first time. Some friends of mine, Jen Monahan, I hope she doesn't mind me mentioning her name, but her and her girls, we got to go out and see them do barrel racing. Right.
Oh, wow. Yep.
And I've never seen that before. Well, I shouldn't say I'd never seen it because I did go to the Houston Rodeo back in March. Right. But this was like a local event and that I guess they do. I guess she has her pro card and, she's racking up points and that I guess is how it works. I'm not certain. I'm new to this. It was my first time seeing it last night. It was really cool, though, because her two daughters, get this. So first of all, they're twins. They're cute as can be, right?
Okay.
And they're 6 years old, and they're barrel racing. They're out there 6 years old barrel racing.
It's crazy. A bunch of friends of ours growing up through things, they would do rodeo stuff. And actually a girl in our neighborhood has been doing the ride and shoot.
Oh, wow.
If you've ever seen that one, since she was before they would let them use bullets,
Yeah.
they still had the gun and it had caps in it. But she is now I think senior in high school. She's ranked nationally. So
wow.
the 6-year-old girls, keep up watching them because that's going to be amazing. I can only imagine how fast they're going. It looks like they're going to fly off the saddle.
No, well, they really weren't going that fast.
Okay.
Those that were going fast were somewhere in in the range of 15 seconds, 15 point whatever seconds.
Yeah.
Ones that were going, more the adults have been riding and everything. Then you get the little ones like this, and they're more between like 25 and 30 seconds. They're
that's
just
still going around.
along.
That's still going around 3 barrels.
Yeah,
I mean,
it is.
And staying on the horse. That's just that right there is the goal for me.
Well, and there was a girl out there. I think they announced she was 3 years old.
Wow.
And she was out there barrel racing.
Yeah.
I'm just like, you've got to be kidding me. That's amazing.
Yeah. I had a buddy grow up around horses and on a farm and stuff like that. He was driving a truck at 4, pulling the hay truck, so his dad and his grandpa and his uncles were putting the hay on the trailer. So it's a different breed that, the rodeo people. I've got a buddy that does steer wrestling. I don't know if, he's a big guy, but his son's starting to do it. And the training they do and the hard work. And, those rodeo people are some of the strongest people I know because they get hurt. They just keep going until it's over. They're like, nope, we've got an event coming up again. And there's not really an off season that I ever see them, just taking a break.
Well, I gotta admit, our friend Jen, that is teaching her twin daughters to do this, I give a lot of respect to because I know it's teaching them at such a young age a lot of great standards and principles in that. So it was really cool to be there and be a part of it. And I mean, essentially, barrel racing is just NASCAR on horses, really. I mean, it's just left turns all the way, right?
It depends. Some of them turn right. That's funny. No, yeah, those are experiences, and especially the smaller rodeos. Going to those, they're a lot of fun because you interact more. If you ever get a chance up in Denton, where where your daughter's at school, the North Texas County Fair. It used to be the Denton County Fair. Now they changed the name.
Okay.
But they do a rodeo up there, and it's awesome to go up and watch those on a nightly basis. It's already over this year, but make sure you get up there next year and check it out.
What month is it in?
It's usually August.
August. Okay. Yeah, I have to keep an eye out for that one for sure.
Yeah.
Good stuff.
Well, we got a lot today to talk about.
That we do. We in talking about interest rates, recently and how they affect the housing market, especially want to focus today on purchasing. Those that are looking to purchase a home, especially those that have been waiting for interest rates to come down to be in the position to perhaps look at purchasing a home. We really want to talk to that demographics today and try to give information, helpful information to you on this. First, want to talk a little bit about interest rates themselves, because we know that the other week the Feds came out and announced a 50 basis point or 0.5% lowering in rates. And want to ask you, Joe, just so you and I can kind of elaborate on this for everyone a little bit. When they lowered those interest rates, when the Fed announced it, the 50 basis points, did mortgage rates drop that day?
Oh man, I wish we could say yes. I mean, I think that's where people, as we're going through today, anybody listening, if you have questions or if you have comments, please put them in the comment section if you're on our Facebook or YouTube. We really want to be able to have an interactive show with our audience. So, but Joe, going back to your question, you were asking me, when the Fed dropped the 50 basis points, did we see a decrease in our interest rates? No, is the quick answer. So, but it's perceived by everybody that's not in our industry that, oh, they cut rates. And so, when we were in the 6.5, now you can get a 6. That's not how that works. When they cut rates, it's the rates that banks are, trading money, back and forth, and it does trickle down. Well, the nice thing about it is our investors kind of knew that this was happening. So I would say 2 weeks ago, they started preparing and dropping the pricing to get interest rates. And that's one thing that people need to understand too, is interest rates are always the same. They are. A 2.5%, a 5.5%, those are always the rates. It's the cost to get that rate that is where we have to try to see in the market what rates you can qualify for, because there is a cost to get these interest rates, or there's a way that somebody is, making a margin to, that's how companies run in the mortgage industry. So the Fed cutting the rate, it actually went the other way that week. Last week and up to today, the 10-year treasury is actually going up. And every time the 10-year treasury goes up, that means mortgage-backed securities are going down because they're not being bought it is as much. So I think, I don't know about you, but I know that I've seen a 3/8 cost change in the wrong direction.
Right. In the cost. Yeah.
I was pricing out one the other day and I lost 30 basis points, and I had to go back to the client and they didn't understand it. So I had to explain the same thing about the Fed cutting did not really change anything in our pricing.
Right.
So, what have you seen on your end with your clients and things like that? What are you hearing when it comes to the rate cut?
In the same thing, I was discussing with a client last Friday in regards to it, and they were shocked to hear that even though the Feds cut rates on Wednesday, that afternoon mortgage rates actually took a little bump up, right? Kind of thing. And and again, that's another reason why we're doing the show, is to help educate those, so that there's a better understanding. Because when you watch the media and that whether TV shows, news, what have you, people think that Fed's cutting the rate, it means that they're going to get a better interest rate. And it's really just Fed cutting the interest rates like that relate to the short-term bonds, not the long-term bonds as far as mortgages go, right? Now, in time, it does trickle down. And as you had said as well, that, in the past 2-3 weeks beforehand, we saw mortgage rates start to come down in anticipation of, right, even though the Fed hadn't lowered rates yet. So when the Fed lowers rates, that doesn't mean that your mortgage rate is going to go down, right? There's not that, but I think you bring a great point out. One of the things that we look at, that you and I look at a lot, Joe, is the 10-year Treasury note.
Mhm.
Now, it doesn't always, mortgage interest rates don't always go parallel to the 10-year Treasury note, but it's a good indicator of the direction of what mortgage rates are going to do for you. So
Yeah, I wish it went hand in hand because there's times where the 10-year Treasury is falling, but we're not getting better pricing as much as when it's increasing. All of a sudden, the pricing gets worse by a lot more. I'm finding that investors and everybody else, they're willing to increase the rates really quick, but they're not willing to drop that pricing on those rates real quick.
and with that, what does that tell you, Joe, about the market?
So, there's a couple of things
in it.
Yeah, I mean, there's a couple of things when it comes to, why investors wouldn't, drop rates right away. They're worried about, they're making money, because when an investor, a servicing investor, lends their money and you're buying it at whatever the cost their rate is, they're betting on making money over a 3 to 5 year period.
Mm-hmm.
Well, if they're locking you into a higher interest rate and and rates do start to fall quicker, then they're going to be refinanced, where now that company is not really making any money on them. Because I don't know exactly, and I would love if any of our listeners do secondary marketing, especially for companies that buy, big books of business to service them. I would love to know, what is the break-even time period on these, because there's got to be a break-even time period, because yes, you make a little bit probably up front when you're getting them, but the servicing part, they're making money over payments and the interest on those payments over time. So I'd love to know kind of what their threshold is.
Right.
I know for us and most anybody in our industry that originates loans, we're promising the investors that there's going to be 6 months of payments made before, and if that's not happening, then, we get what's called early payoff chargebacks from a company standpoint and from an LO standpoint. So I still would like to know. I don't think 6 months is really the break even, and if it's that quick of a break even, great. But if there's any listeners or anything out there that could answer that, it'd be awesome to hear too.
Mm. Well, how do you see, especially from what the Fed was talking about? I mean, here we are getting ready to go into October. We've got October, November, December to wrap up the year, the last quarter of the year. How do you see, I mean, granted, we don't have the crystal ball, right?
No.
But how do you see interest rates going for between now and the end of the year?
So I'm going to leave out all like opinionated from political standpoints and things like that, because this show is very friendly to a lot. Right? I mean, the thing that concerns me is we're upon an election. Neither Democrat nor Republican or independent want to have more inflation reports come out that are in a bad negative light, because that's going to hurt what they perceive, could swing a voter. So I don't think over October and we're going to see a huge change in rates going down. I think we'll see a little bit of a dip, but I think most of it's been built in right now until after the election, So that's the one thing I would say. And I apologize if you guys hear background noise. It's hard to work from home when there's always family around, but I love doing it too. So,
but that's what makes it so real.
Yeah. Well, and I do think October is going to be kind of just status quo, I guess.
Yeah.
It's going to be about the same as what we got, for the last year. I think we might see a little bit of pricing dips, but nothing major. I think after the election, when true inflation reports come back out, and if the inflation is down the way that we're hoping that it's going, and our economy is, still strong, but not overly, I don't know the words I want to use in the proper way, but, where they're not inflating information about our economy being stronger than it truly might be.
Job reports and everything else. Yeah.
That's a whole nother conversation, but you bring that up, and it's a good thing, because job reports, the lower your unemployment and the stronger jobs created, that actually does hurt us in a negative way.
Mm-hmm.
You know, and it's weird, in my opinion, that, you know, you have a strong economy, you have good job reports, but interest rates go up.
Mm-hmm.
And I get it, because, you know, people have the money to be able to pay more then, I guess. But I think the job reports, the things that people don't understand and look at, is the retraction of the numbers from the previous month.
Right.
Nobody looks at that.
Right.
I mean, you're off by 80,000 or 100,000 jobs on some of these reports. It shows that you're fluffing some numbers somewhere, because if I'm off by $1,000 on closing cost, I mean, my client's going to walk away from me. So
I kind of wonder if these accountants that are adding these numbers up, I mean, do they do their own tax returns, or because this is probably should be investigated, I think.
Yeah, I agree with that. But I mean, I think, you know, moving on from what the Fed did and moving on from that stuff, what does lower rates do in a positive manner? Let's start there first. You know, when it comes to home buying.
Yeah. So in the realms that we're in today, as far as the interest rates coming down compared to, let's say, what it was a month ago. Let's use that as an example. A month ago, let's say it was a $400,000 home, right? Average $400,000 home with a, let's say, 7% interest rate. With that $400,000 being the loan itself at 7%, you're looking at a mortgage payment of $2,661 to be exact.
Let's
right?
make sure everybody understands that's just the principal and interest
Principal
of
and
the
interest,
payment, not your taxes, insurance, or mortgage insurance.
PMI,
right?
homeowners, taxes, none of that. Just the principal and interest. $2,661, $400,000 loan at 7%. Now, let's say that they're able today to be able to get, with the interest rates changing, how they're qualifying, they're able to actually get a 6%, right? A full interest rate lower. How does that affect things? It affects it in two ways. Number one, it can definitely lower their monthly payment. It would actually lower it down to $2,398. So now you're talking, you know, just over $260 a month savings with that interest rate changing over the past month, right? But it could also mean that instead it gives them more buying power, right?
Yep.
Qualifying for more. So now instead of a $400,000 home, now they, to be able to hold that same monthly payment of $2,660, now it may end up being more like a $450,000 home, right? That they can, with the same payment. So that's kind of the positive side of what we've seen in the past month, of the interest rates, you know, starting to trickle down. Those are just some examples. I want everyone to understand those are just example numbers of a $400,000 loan that can actually be, you know, in the positive effect for purchasing today.
Right. The other positive thing that people don't think about is it could also help with these lower rates and the, you know, your purchase power. It could help with the lower inventory that we've been fighting, because people now that maybe they bought their starter home in 2020 or in, you know, even 2019, 2021, 2022, right? Now they might, you know, let's say that now they're having their second child or their third child, or, you know, families growing. Nowadays, you know, in-laws moving in or, you know, anything like that. Now they could go and look for a bigger home. Well, now, you know, if they're selling their home, that'll help us bring more inventory into the market versus just relying on builders to keep trying to keep up with demand. Right. So I think that's another positive that people aren't thinking about of, well, this could open up those people that want to upgrade, because we have seen in the market, and we actually had people on the last series, right, with the, you know, realtors, and homes are staying on the market a little bit more. You know, rentals are staying on the market a little bit more. So, you know, when the rate's dropping, that might, you know, speed back up, but we could also add some inventory to it. And that's what I'm hoping the positive comes out of some of this too, is those people that want to take the next step and buy the bigger house or, get out of their starter home and get into a permanent home where they could see grandkids coming home. I don't know what that's like because I've moved too many times, but those type of attitudes, I think that'll help our market also.
You bring up a good point, I think, though, Joe, in regards to the inventory, right? Because when we look at moving forward, if interest rates continue to come down, yes, we are predicting, not that we have the crystal ball, that home values are going to go up. And it's really just because of the supply and demand, right? Right now, the inventory is small and the buyers are about somewhat small, a little bit more, right? But as soon as interest rates come down that we're talking about, well, now more people are going to flood into the market that have been sitting on the fence waiting for interest rates to go down. But we still have just this small inventory. And that's where, yes, we are hoping that builders continue to build for more homes to where we can have more inventory. Yes, those that suddenly come into the market, some of them are a good percentage are going to be first-time home buyers. And some of them, yes, are going to be current homeowners. So those homes will be coming on the market. That'll help, right? But we want to see more housing inventory to be able, otherwise, yes, home values will continue to go up because of the supply and demand.
Yeah.
Right?
So, my nephew's buying a house and just went under contract. So very, very proud of him. He's 21. He's, got a great head on his shoulder. Yeah. And he's buying it on his own. He's doing an awesome job, with that. We've put in probably 7 to 8 offers, and there's been multiple offers on these same homes. So, that also tells me price range matters for our first time home buyers, because he's in that, he's in a good price range for him. I'm not going to share it because I don't know if he wants everybody knowing, but he's in a great price range for a starter home, first home, but he's also realistic. On all those offers, he's wanting inspections because these homes in Nebraska are beautiful homes built, 60s, 70s, because the neighborhoods he's looking in and things like that. So, with the multiple offers, that's kind of hurt. Now rates are going down. Now more people are looking, is what he's found. But we just got under contract, and I'm really excited to help him get into his first house.
That's awesome. That's great news.
But that's one thing that I'm seeing with the lower rates is it's opening up more people that are wanting to go and look, which is a good thing for our economy, and it's a good thing for people's wealth. So really excited, and with that. But there's a lot of negatives to it. And what I said, where there's more people out there, talking about the negatives of this. If you don't own a home today, don't wait for the rates to bottom out. It's still smart to get in because you can always refinance it. But guess what? What he's dealing with is multiple people trying to buy the same homes. Yeah. So yes, your purchase power has gotten a little stronger, but so has others. Yeah. So I would still say this is a great time to get in, buy a house. Start your wealth building. Like we've been trying to teach people in this podcast for the last year. And we're actually over a year now, Joe.
Are we really?
Yeah. I mean, we started August last year preparing. No, I guess October, the first week of October was our first show.
I look and see now. Now you got me looking.
Now I took us way off topic.
Oh no.
So, the other negatives. The other negatives that people need to look at is, with the lower rates, there are more things that if it becomes more of a bidding war, those sellers, that's when the prices are going to start going up on homes. And sometimes it might not appraise if it appreciates like we did in 20 and 21, right? Where we saw that really big appreciating value, but the appraised values were behind. Right. And so that can cause
for that.
And that can cause a problem for those first-time homebuyers that don't have that extra cash on hand, because we have to go off of the appraised value or the purchase price, whichever is lower.
Yes, whichever is lower.
So
here's, if I can jump in, and before I kind of get into, I mean, we're almost talking about the good, the bad, and the ugly of all of this, right? We've talked about the good as far as how it can help you with your mortgage payment and more purchasing power. Before we go into a little bit of the ugly part of it, though, if you are looking or thinking about purchasing a home between now and the end of the first of the year, if you have questions, please drop them in the comments below. While we're live, we would love to be able to help you out, answer some of the questions you might have, different scenarios maybe that you're up against. Let us know. We'd be glad to, coach you through it right here live.
Yep.
But in talking a little bit about what you said further, in the environment that we're ramping up to, and understand, folks, if you've been waiting on the sidelines to purchase a home, you're trying to find the right time of interest rates dropping, and if you're thinking that home values are going to drop, I'm sorry, but you're in the wrong crowd, because that's not with the low inventory that we have. The supply and demand isn't going to allow for that. So if you're looking, to time the market right, now is the time, right? Before home values start to go up and interest rates come down to the point like what you're talking about. Now you're getting into bidding wars. Now, when that happens, then as we saw back in 2020, 2021, and that the homes that were 400,000 now are getting offers because of the bidding wars. You're getting offers of 430, 440, 450. Okay. So if you're thinking of waiting a year, let's say, next year, a year from now, number one, the value of the homes are going to increase. If we look at a $400,000 home, as the example I gave earlier, and an typical average of 5.8% increase, you're looking at just over $23,000 increase in the value of that home. So now instead of a $400,000 home, now it's $423,000. But it doesn't stop there at 423, right? Because then if it gets into a bidding war, next thing you know, it's going to be 450,000, right? As far as an offer going in, and again, hoping that the appraised value comes in at that amount, right? Because if it doesn't, if it comes in at 440, 430, well, you got to make up that extra cash at closing, the extra 10 or 20,000. Now, if you look at it, as we were talking about earlier, as an example of a mortgage payment of $400,000 purchase price, let's say today, 400,000 at 6.5% interest rate, you're looking at principal and interest, monthly payment, $2,528. If you wait a year, let's say, value of homes go up, gets into a bidding war and so on that we're possibly looking at, now you're looking at 450,000, but the interest rate has come down. I'll give you a full percent if you want, comes down to 5.5%. Well, your mortgage payment is $2,555. So it's
for that same house,
more, right? And your payoff on the balance of your mortgage is much higher. You're going to have to come to the table with more down payment at that 450 than the 400,000. So if you're looking at a time to be able to get into the market, now is the time, right? Before you start getting into this bidding war thing that we see happening as interest rates come down, more people come into the market, the smaller inventory.
Yeah, and I think you brought up a great point. The appreciating value, depending on the area, can range, right? It can be, 0% in some areas. I mean, right now, I don't know what area that is, but there probably are some, but I mean, I think on average right now in Texas, are we at 8 to 10% in certain areas?
For that high.
Well, I know like the location matters. So I'm probably off on the. I think Hillary and Taylor last week said it was on average 4 to 5.
Okay.
In Texas. So, but in like I know Argyle, where we were living, appreciation has been 10 usually. It was higher at one point, but again, 400,000 now it's 440,000, $450,000 home. Right. And if that home, if you fall in love with it, there's probably another person that's going to fall in love with it too. Absolutely. So that's another part of it. So I think now is the right time. You're saying it right. Now is the right time to get into a house. And you can always refinance it and drop that rate if they keep going down.
So you can always lock in the purchase price,
Mhm.
Interest rate, though, you can always refinance.
Correct.
So buy now, lock in the purchase price at what it is today, because this is the cheapest that house is going to be today,
Yeah.
right?
So, well, I will say, guys, I know we're coming to the end of the show, but here is an easy way to get get a hold of Joe or I. Our email addresses. That is your email address, right, Joe?
Yes.
Okay.
Yep.
So you got, and I just did it in alphabetical order, so it's not because I wanted me first. But you have jbartram@umortgage.com and you have jreams@umortgage.com.
Yes.
Guys, if there's anybody that has questions, I don't care if you're a loan originator, if you're having questions or anything like that, hit us up. We'll answer them. And any, viewers out there that want to know more about the market, our emails, you can email us, you can call us, but we will love to talk with you, love to help you try to buy a home. If any of your friends and family are looking, please hit us up, because that's what we're doing this for, is to provide education, but we do help clients with these things all the time.
So before we wrap up, Joe, let's talk about some tips for buyers, those that are looking to purchase, between, let's say, now and the first of the year. What's one of the first things that, tips that you would give for them?
First thing is, so if you're looking to buy by the end of the year, get with a loan originator, get with Joe or get with me. Let us talk to you about how to budget for it, because you need to understand what a budget is when it comes to buying a house. Because just because you can afford the monthly payment, there are other things about buying a home, if you're a first-time home buyer, that you need to understand that come up. So taxes on a yearly basis go up. So that's one thing that I would say. Get with a professional and let us help you get pre-approved and understand it. And if you don't have a realtor that's already in your pocket, we have them. We have some of the best realtors in the industry that we work with. So,
Absolutely.
Joe, same question back at you. What would you tell someone?
You touched on just briefly getting pre-approved, right?
Yep.
I think that's a great step right there, because that's going to really help decide the position, or show the position that you're in, with a quick credit check, a soft pull credit check, not dinging it, to be able to see where things stand. Also be able to get you, in doing that, in ensuring your financial readiness for this, right? I think is going to be key for you. So getting pre-approved, it's painless. It's not like going to the dentist, okay, folks?
And it costs you that much money.
Yeah, zero to get pre-approved, right? The only thing it costs you is probably, I don't know, 15, 30 minutes of your time, right? And talking
maybe, and if you're talking with me, maybe a couple of dumb dad jokes. You never know.
You got one? Do you
No,
have?
I don't. I'm not sharing
There?
it on this. We'll have to do that as a coffee talk. Come up
Okay.
with a couple. That
All
would be
right.
a good
Let's see
one.
if we can do that next time.
Right.
Well, I do appreciate everyone tuning in. And again, if you have any questions, feel free to reach out to either one of us as far as getting ready to purchase your next home, and whether reach out to us on our email accounts. You can also hit us up at the Mojo Show podcast at gmail.com. You can email us there as well. So appreciate everyone tuning in. Next week, be sure to tune in next week at our usual time, Wednesday, 9 a.m. Central, as we continue our series on how interest rates affect different aspects of the housing market. We're going to dive into how it affects refinancing your mortgage next week. Now, I understand you're probably thinking, that doesn't apply to me. I got a low interest rate already. You'd be surprised. So tune in next week, because we got some great things to cover with you in regards to refinancing and such. If you only caught part of the show today, and you want to see the rest of the show, go to our YouTube channel at the Mojo Show Real Estate Podcast on our YouTube channel. And while you're there, click the subscribe button, because we are on a mission to get to 1,000 subscribers. And before we close things out, Joe, any last comments or nuggets of wisdom?
I do not have any more. I want to say thank you to you for putting this stuff together. And I think this series is, it's interesting if you want to know more about how the interest rates work and how we come up with, how we can get you into a house.
Fantastic. Well, I'm Joe Mortgage, and that handsome guy with the beard is Cup of Joe Mortgage, and we'll see you next week.
Mr. Moon.